The reality is, a lot of you need that person who's going to give you a non-BS, no fluff type approach, cutthroat, straight to the point, tells you exactly what you need to hear, not what you want to hear. This is going to be me today. I'm going to tell you how I lost 200k in funding, but what I did correctly to set myself up for success with that. Because a lot of you are so dependent on one prop firm or one payout that it's actually delusional. So without further ado, let's get into it. Strap up, let's get ready for some value, and it's going to be a little bit cutthroat. Oh. Are you ready? Are you ready for this? Do you remember your first subscriber? I think it was me on a different account, you know? Oh yes, look at that. That looks sick. Check that. It's fucking mega, that doesn't it? Look at that. Oh yes, got some weight to it, you know. Look at that. That is absolutely class. It's a nice mirror as well, that. That is class. Yes, where should we put this? I reckon we put it over here now. I reckon it's quite nice. What do you reckon?
Perfect, mate.
You just don't drop it now.
Well done.
Cheers, sir. Oh yes. You see yourself?
Just about.
Mega.
Congrats, mate. Well done.
Cheers.
Good achievement.
I remember the first videos when I was shaking up in, couldn't even talk to the camera. Still can't talk to the camera. A lot's changed. It's class. Made up. Beautiful. Go on. So, bit of a backstory on the capital itself. I had funds with other companies. I thought it was a good option to diversify my options with another prop firm, just in case anything like this happens. I wanted to be covered upon different aspects. So essentially not having all my funds with one or two firms. So I chose two True Forex funds, tried them in the past before. They seemed great at the time. I was like, right, let me get a challenge. So I passed phase 1, phase 2, got the account, was due a payout. Now I appreciate it's not a big payout, but the goal was to drop the risk essentially coming into the account, get the withdrawal fee back. So let's say call it 500, a grand, whatever you pay for the challenge itself, get that back, get a small profit from it. The account at that point is bulletproofed, job done. Everything else is pressure free. So that was the goal, did that. And I literally was waiting like a week further to then get the payout, right? In my mind, the payout was secured. But then we get a little twist to the story, don't we? So we get a memo from Twitter and we get, we regret to inform you that True Forex Funds has seized all operations and will be permanently closing due to financial insolvency. Basically saying that they couldn't pay people out on the money that was owed people. So it got into a bit of a situation, didn't it? Now, thankfully for myself, I have personal accounts, not just one, I've got two. So I'm covered if anything like this happens. Different prop firms, essentially other things in the works as well further down the line, but overall I'm protected, right? That is the key. With the vast amount of traders, the amount of people that are relying solely on one prop firm, two prop firms, even three, is honestly delusional, because this can happen at any point. And I appreciate that different firms have more credibility. For example, I don't want to put names in there because I'm not sponsored, but you know, for example, FTMO, been in the game for a long time. I would probably call them the most credible in the Forex space right now, and have been for a long time. So someone like that you would put more trust into. Whereas other firms like this, for example, were a little bit more on the kind of backseat, just in case you want to diversify. You're not going to put all your eggs in one basket with these, or you shouldn't anyway. But the truth is, even with different firms, you never know what's going to happen, especially with regulation potentially coming into play. A lot of these firms are going to be disappearing. So my focus for you guys, we're going to get into the whiteboard a little bit in a minute, and we're going to touch on some key topics of how to do this. But your goal should be to build your own personal accounts. It should not be I want 20k payout, that's going to solve all my problems. Because if you're thinking like that, it's honestly delusional, and you will not be here in a year, 2 years, 3 years time. Trust me. Trust me. I don't know how else to say it. You need to be focused on building your own golden egg, which is your personal account or accounts. If you do that and you think longer term, you set yourself up for success. Ignore all these people that are focused on prop firms, because although it's attractive right now, it's very much a pendulum swing, and at some point the pendulum is going to swing back the other way, right? So bear that in mind, please. Let's get into the whiteboard. First of all, these are eggs in a basket, if you didn't realise, right? Most people, when they come into the markets, especially 6-12 months in, they think about trading like this, and it's because of the way prop firms are marketed within the industry. Everyone's focused on passing, getting 1 to 200k payouts, accounts, and then 10, 20k payouts, right? But if you're always focused on that, you transform your entire trading around that. So then the problem is you're just focused on just one trade, making that happen for you. But the truth is that is not a trader's mindset. That is a gambler's mentality, and that is for the amateurs, right? So you got to transform it. You got to make it into a way where we're focused on being the trader, because the barrier for being a trader now is diabolical. All you need is a £100 account, open a broker account, and you're technically a trader. But it's not the case. You want to be building over time these small and steady wins to take this equity curve from 0 to the stratosphere. So you want to be doing that, and the way you do that is just compounding these by small results. It doesn't have to be 10 to 1s, it doesn't have to be 20 to 1s. These are 1.5, 4.6, 2.7. Slow and steady. You'd be quite surprised how big you can build your account and how quickly, once you start building that from 0 to 100. So that's the mentality that we need to have. That's the mentality to avoid. And the problem is that's how most people think in the industry. So when most people go in this way, you got to go this way. It's just the truth. Let's talk about quickly how to transform one income stream in the way that you're thinking about one prop firm like this into 7 or 8 different income streams, which is smart thinking. So don't put all your eggs in one basket, because that's smart. What we do is we take funding, personal capital, and investors. 3 different sectors. Within funding, you could have 200k account with FTMO. You could have a 200k account with Alpha Capital Group. You could have another one with 200k. You've got 600k assets under management here, which is ideal, right? But that's just one stream, and you're diversifying it into 3. Then you can have a personal account. Now, the truth is, most people are not even focused on personal accounts, but that is your nest egg, that's your baby, that's your golden goose that lays the eggs, right? That's what you can be focused on. So your account number 1, your main account could be based in Australia. You can have a second account that is based in Europe. Now, what you're doing there is being smart, because you're diversifying. If one account goes down, cool, it's not going to harm you too much, because you've got a second account, and then you have a third account. The same with prop firms. The more accounts you have, and the better you can diversify. If one of these goes down, for example, you're still fine. But the problem is, if you just have one account, if that prop firm goes down tomorrow, you're messed up, you're screwed, you're done for, right? And that's how most traders are nowadays. So my best advice is create this branch, almost like a bit of a company setup, from how these prop firms are set up, how personal accounts can be set up, and same with investors. If you do that and you apply it properly, you've got a good chance of success long term. And that's the difference between the way that I think and the way that most traders in the industry think.
Get the picture, Paul.
You get a proper behind the scenes shot here. Get the slippers in.